You can see, you can hear me clearly, right?
Yes, yes, I
Okay.
can.
So an asset was purchased for $50,000 on 1st January 2010. Okay.
Mm-hmm.
It had a useful life of 5 years. On 1st July 2012, the management made the decision to sell the asset.
Mm-hmm.
The asset was made available for sale in the present condition and was actively marketed. The fair value at that date was $24,000
Mm-hmm.
and will incur selling cost of $2,000. You're required to prepare an extract of SOPL and SOFP for the year ended 31st December 2012. Okay. So on 1st January, the asset was purchased at cost of 50,000. Clear? Okay. Hello. Am I audible? Sarah, are you there? Hello. So this is said that the asset was purchased for 50,000 on 1st January 2010. Okay.
Mm-hmm.
And after 2 years, okay, after the whole 2011, the whole 2012, and the 6 months, sorry, the whole 2010, the whole 2011, and 6 months of 2012, they decided that
Mm-hmm.
they're going to sell it off, right? So it is
Mm-hmm.
2.5
Yes,
years. Understood?
understood.
Okay. So at that time, they decided to sell. So when an asset is going to be sold, it is taken under IFRS 5 NCA held for sale, right?
Mm-hmm.
So the depreciation is 50,000 divided by useful life of 5 years. Just a moment.
Okay.
Useful life of 5 years, right?
Mm-hmm.
So that would be,
But we'll have to multiply it by 2.5, right?
yes, yes, I'm doing it. That is, I'm splitting it. Just a
Ah,
moment.
okay. Okay, okay.
I'm going to split it for 2 years and 6 months, okay?
Mm-hmm. Okay.
So I've split it, okay? And
Mm-mm.
over the end of 2011, the value of the asset is this one, okay?
Okay.
And then again, I'm gonna calculate the depreciation, but this time just for 6 months. Understood?
Understood.
Okay. So at that time, what is the assets value is equal to this one plus this one, right?
Mm-hmm. Okay.
Understood? Okay.
Understood.
And the asset was made available in the present condition and was actively marketed, right? And the
Mm-hmm.
fair value at that time, that is on 1st July 2012, was 24,000 less the selling cost, right? So we know
Mm-hmm.
what is NRV? NRV is fair value less the selling cost. So we
Mm-hmm.
need to find out 24,000 minus 2,000. Clear, no? Okay.
Yes.
And then we are going to compare the NRV with the fair value. Sorry, with the carrying value. Understood?
Okay, understood.
Okay. So that is going to be equal to 22,000. Okay.
Mm-hmm. Okay.
Now we are going to compare the carrying value and the NRV. So what is the carrying value? 25,000, right?
5,000. Mm-hmm.
And what does the standard say? You should take lower of NRV or lower of carrying value. So out of these two, which one is lower?
NRV.
NRV. So the value becomes the NRV. Understood?
Mm-hmm. Understood.
In that case, there is a difference, right? We had a
Mm-hmm.
loss. So that is called impairment loss. Understood?
Understood. Okay.
Clear now? So 3,000 is
Clear.
the impairment loss. And at the end of the year, the fair value becomes the NRV as well. Understood?
Understood.
Okay, clear? Since the asset
Clear.
is grouped under IFRS 5, we have no further depreciation to be calculated. Understood?
Understood.
So this year, the depreciation is 5,000. Okay. The impairment loss is 3,000. The asset now is grouped under current asset. Clear? And the
Mm-hmm.
asset would have the value of 22,000. Understood?
Understood.
Okay.
Yes, understood.
Now, the second type of questions where we have talked about IFRS 5 NCA held for sale, if it is a component of the entity, if it is disposed as a group, right? Disposal group.
Mm-hmm.
So there was a format that we explained. That means we are going to take a regular SOPL out of which we are going to remove the SOPL contents of the disposal group. Understood? That is the unit which you are going to dispose of. It would have a separate identifiable results, right? So those
Mm-hmm.
results would be removed from company's overall results. Understood?
Okay.
So this is the question. Company, just a moment.
Yeah.
Let me clear everything off.
All right.
Okay. So this is the question. A company has 4 branches, okay, whose results are given
Mm-hmm.
below. The company decides to close branch D. So this is the company as a whole. Understood?
Yeah, okay.
And this
Understood.
part is the branch D only. Okay.
Mm-hmm. Okay.
So when we are going to show the results, what do? We're going to just deduct this from this. Clear?
Clear.
Understood? No?
Understood.
So in that manner, this becomes minus since it is cost of sales. Clear?
Yeah, so basically what we're doing here, since we're selling
Yeah.
one part of the company, we want to
Hmm.
create a new financial statement that excludes the one that's being
The
sold.
other. Understood?
Okay. Yes, okay.
Clear? No? So
Yes, clear.
4,500 is this also we're going to make a minus value of this minus this. Clear?
Mm-hmm. Clear.
1,500. Is it 1,500 though? Okay. So this is distribution cost, okay? Minus
Mm-hmm.
this one. And it should be a minus value as well. So we're going to keep it in brackets. This is the Excel workout. You
Mm-hmm.
know how to do it manually, right? With the use of calculator.
Yeah, I'll have a paper and a pen with me so I can just write those down
Always,
and
when
then
you
use
do
a
the questions,
calculator.
do manually and with the Excel as well. Clear, both of them.
Okay.
Worked as an auditor, so I'm sure Excel is something that you know already, right?
Yeah, yeah.
Yeah.
But like as per like what I recall, so when I'm doing oh, you're talking about the section C questions, right?
Hmm.
Okay, so you're saying I have to do it both on paper and on Excel?
On Excel, because so that you get the
Okay.
grasp of how you do it. Understand?
Okay, got it. Yes, yes, okay.
Okay, so 3,800 and the tax would be how much? 800, 500 minus 100, that is 400. Clear?
Mm-hmm. Clear.
Okay, so this is the
Okay.
result. Now you're going to
Mm-hmm.
separately give the results of the discontinuing entity. So that becomes equal to this one. Clear?
Mm-hmm.
2 minus of this one. And then you get this plus this, right? And then again, minus of distribution cost. Clear?
Clear.
Okay. And then you get, okay, minus
Mhm.
600. That is, it's not PBT, it's loss, right?
Okay.
And the tax expenses could be also reduced. That is minus of this one. Oh my God. Okay. And then this one plus this one is your loss for the year. Understood?
Understood.
Okay. Now you got the
Mm.
loss, right? The same
Mhm.
loss, you're going to go upwards towards the profit for the year and you're going to show it there. Okay.
Okay.
And after that, you get the total profit.
Mhm.
Understood?
Understood.
Clear? So you
Yes.
removed that particular item from the company's overall balance sheet, sorry, overall SOPL income statement, and then you
Mhm.
did a separate notes to accounts that is kind of a disclosure where you have
Mhm.
separately shown the SOPL of the discontinuing operations, and this result is being taken over the overall results. Clear?
Clear.
As discontinued operations. Understood?
Understood.
Okay. Now we're going to move towards the net standard.
Okay.
Fallen value of an asset is termed as impairment. So IAS
Mhm.
36 deals with what would happen if your assets value falls down. Okay.
Okay.
So basically, it is simply, as we say it is a fallen value of your asset. Clear? Okay.
Okay.
So how does an impairment occur? Impairment occurs when whatever net book value you have shown in your books is not something that is being recoverable by the same asset if you're going to sell it off. Clear? So that means your value of the asset has decreased. Understood? So in this
Understood.
case, we are going to have to record impairment. Understood? Okay.
Understood.
Now,
But
yeah.
how do I know that the assets value has decreased?
You have
Okay.
you know what happened in India recently?
Yes.
Yeah. So the flight actually crashed down, right?
Mm-hmm.
So
Yeah.
tell me something. Would passengers be feels the same way when they are going to travel Air India again? No, right?
No.
They're going to
Mm-hmm.
decline. They're going to
Yes.
cancel their flights. They're going to book towards any other flights, right?
Mm-hmm. Yeah.
So in that way, they would realize that they're going to have loss of revenue, income, etc. in the future, right?
Mm-hmm.
Because if they're using the same Boeing again for the traveling purpose, people are not going to hop in, right?
Mm-hmm.
Okay. So the
Okay.
Boeing has a decreased value now due to the change that happened, right?
Okay.
So that
Okay.
is a great example for impairment.
Mm-hmm. Okay.
Understood?
Yes. Understood.
Okay. Even better. Mm, what happened? You have bought a car. Okay.
Mm-hmm.
You have bought a car from a very reputed company. Okay. Or you know
Okay.
BlackBerry, how
Yes. Yes.
BlackBerry mobile phones.
Yeah.
Okay, so long back they were the stars, right?
Mm-hmm.
People started buying it, but the problem was they didn't update the technology, right?
Mm-hmm.
So
Yes.
many phones were released afterward, which had more features than BlackBerry, right?
Mm-hmm.
So slowly the customers shifted from BlackBerry to another phone, right?
Mm-hmm.
Now
Yes.
the problem is BlackBerry can't be sold at the same value it was before, right? So that
Mm-hmm.
means the
Yes.
value of their assets has actually decreased.
Decrease. Mm-hmm.
Understood? An
Understood.
impairment. Clear?
Okay.
So there
Clear.
could be indications that the asset value would reduce. Clear?
Mm-hmm. Clear.
Okay. That we would discuss later on. Okay?
Okay.
So
Okay.
impairment in the terms of standard, it simply is that your net book value is actually very high compared to the actual amount that you could receive from the asset. Understood?
Okay.
That
Indeed.
amount is called
Okay.
as recoverable
Mm-hmm.
amount, RA. Clear?
Clear.
So, how do you calculate RA? To calculate RA, you need two things. One of the thing is NRV that we studied just recently.
Mm-hmm.
And the other thing is value in use. So, what is a value in use? This is something that we're going to go deeper towards the net standard. For this
Okay.
standard, we're going to just brush it through. Okay.
Okay.
So, value in use simply means that whatever amount that we have of something now, it won't be same as in the future, right? So, I bought
Okay.
a laptop, I bought a MacBook. Okay. If I'm to sell this after 3 years, I won't get the same amount, right?
Mm-hmm.
Or even
Yes.
better, I have invested a 10,000 on land, right? 10 years back.
Mm-hmm.
Now the land amount is like 20,000. It hiked, right?
Mm-mm.
Why is that? Because over the years, the value of the money changed, right? Due to interest
Yeah.
and stuff. Clear? So that
Mm-hmm.
is
Clear.
called value in use. Clear?
Mm-hmm.
So what is value in use? It is the present value. That is now what would be the amount 3 years in the future. Clear? So in three
Clear.
years, it would be a different amount, right? We have to
Mm-hmm.
calculate what that amount would be now. Clear? That is present
Okay.
value of future cash flows. Clear, no?
Mm-hmm. Clear.
And also we are going to find NRV as well. And
Okay.
whichever is the higher amount would be our assets value. Clear?
Okay.
So
Okay.
higher of NRV or value in use. Understood?
Okay.
Now the treatment. If the carrying value is very much high, but the recoverable amount is only much, then that means we have to record impairment. Understood?
Okay. Understood.
So after that, the asset value becomes the recoverable amount. Understood? No?
Mm-hmm. Mm-hmm.
Now, suppose the CV is less, that is, net book value is very low, and the
Mm-hmm.
recoverable amount has actually increased. That means the asset has actually great of value now. Then we're not going to record any impairment. The asset is going to be still at the carrying value unless you are opting for revaluation method. Understood?
Understood.
Okay. The third treatment is if there is impairment loss, it is going to be taken as an expense in SOPL. Clear now?
Clear.
Now, the rules of recording impairment loss. So, basically, there are two rules. You either mark your assets in cost model or revaluation model, right? So, if it
Mm-hmm.
is a cost model, you're going to record impairment loss in SOPL. Okay. If it is a
Mm-hmm.
revaluation model, your impairment loss becomes the revaluation loss. Okay. And it is going to be treated same as IAS 16 treatment. That means the loss would go to comprehensive income. Understood?
Somewhat.
Okay. That is,
Okay.
you have revaluation gain that is being recorded in OCI, right?
Mm-hmm.
So if it is a loss, it is an impairment. Understood?
If it's a
That
loss, it's
impairment,
an impairment.
yeah,
Okay.
impairment is fall in value of the asset.
Yeah, yeah.
But
Okay.
in revaluation model, that impairment loss is called as revaluation loss. Understood?
Okay. Okay,
Clear?
okay. Okay.
So it would be
Yes.
taken in OCI. Simple.
Okay. This is just for IAS 16, so
Yeah,
property plant
IAS 16.
equipment.
Yes. Now, what are the indications of impairment? Now, we don't simply take an asset and say that it has impairment. Okay, there could be indications that the asset is going to lose its value. Clear?
Mm-hmm.
So, there are two types of indicators, internal indicators and external indicators. Clear?
Mm-hmm. Yeah.
So, you have actually taken as an asset over the useful life of 5 years. Okay,
Mm-hmm.
but 2 years in, and you have noticed that the asset has significant defaults. Okay, the asset
Mm-hmm.
is really poorly working, and you
Okay.
have an intuition that within the 3 year the asset is going to be dead, right? So in that
Mm-hmm.
case,
Mm-hmm.
the recoverable amount of the asset is going to go down.
Mm-hmm.
Okay, so if there is an
Yes.
obsolescence signal, if there is a damage than what we expected, whether if there is an adverse performance, then everything would actually affect the cash flows generated from the asset, right?
Mm-hmm.
If the cash flows is generated, then that means the value in use would be affected. Clear?
Yeah.
So we have to compare the value in use and NRV and then take the higher of it and change the value of the asset. So that is called internal indicators. Now
Mm-hmm.
you see, due to what happens outside, it could be that the asset would lose its value. Example, the Boeing, right? So after this
Mm-hmm.
incident, what would happen? All the Boeing flights amounts, that is the value of the Boeing flights would go down, right?
Mm-hmm.
So there would
Yes.
be an impairment. Clear?
Okay.
Now, what happened with BlackBerry? The change in technology, right? So there
Mm-hmm.
could be an impairment or any market
Okay.
condition where anyone has entered, exited. So it would also lead to impairment. Clear?
Mm-hmm.
Or any
Clear.
economic conditions for that matter, inflation, deflation, etc. Okay.
Mm-hmm.
Now,
Okay.
the other problem is also the interest. So if the market rate of interest changes, the value in use would also change because value in use actually uses interest. Understood?
Mm-hmm. Okay.
Okay. Now the carrying value, or if you are deciding to sell your company, but the net assets value that you have shown is not something that you're getting. Clear. That means
Mm-hmm.
the market has a different value for your company. That is called market capitalization. And it is much lower than the net assets that you have shown. In that case, also, you would have impairment. Understood?
Mm-hmm. Understood.
Now, what is a present value? So, present value is the value of cash flows in the future at this date, at today. Clear?
Mm-hmm.
The value in use is equal to present value of future cash flows.
Mm-hmm.
Okay? Now, for
Okay.
two categories of asset, this is an equation that you have to study. Okay? This is going to be
Okay.
studied in detail in the next standard. Okay?
Okay.
Just that here you see R is the interest
Mm-hmm.
and N
Okay.
is the number of years. Clear?
Yes. Okay. Clear.
Okay, now?
Okay.
Now,
Yes.
in two cases, there is no impairment record. The impairment is actually tested annually. We don't wait for indications. Clear? So,
Okay.
what are the
Clear.
two cases? So, the two cases are first is intangible assets with indefinite useful life. We have already discussed, right?
Mm-hmm.
And the second case is the goodwill that is being acquired. That means if you're buying a different company, um, you're merging, right? You are
Mm-hmm.
either merging or you are into mergers and acquisition, right? So in that
Mm-hmm.
case, when you're buying a new company, okay, there could be goodwill. What is a goodwill?
Mm-hmm.
The extra amounts that you get over your net assets, right?
Mm-hmm.
So if there is goodwill, you have to annually see that whether or not the goodwill actually exists in the same amount. Clear? If there is any decline, you should record impairment loss. Clear, no?
Okay. Clear.
Understood?
Yes.
Next one, a category of assets. Okay. We'll look into it, why we are going to actually study this. Okay. So a category of asset is also called as cash generating unit. Okay. Now, what is a cash generating unit? Suppose you have so many related businesses in under your own company. Okay.
Okay.
So you have different branches, you have different product lines, right? Okay.
Mm-hmm.
And you have noted that one of your product line or a branch is actually incurring losses over time. Clear? So that
Mm-hmm.
means it was not as profitable as it used to be before. That means it is having some glitches, right?
Mm-hmm.
And you can actually identify that glitches from that individual section itself. That means it is identifiable. Clear?
Mm-hmm.
So in that
Mm-hmm.
case, that group, that is whatever assets you have in that specific unit all together is called as cash generating unit because they together generate cash flows into your organization. Understood?
Okay. Understood.
Okay. So if the recoverable amount of an individual asset cannot be calculated, CGU's recoverable amount could be calculated. So individually, the asset doesn't have a value per se,
Mm-hmm.
or we
Mm-hmm.
can't calculate the recoverable amount just taking out one piece among the others. Clear?
Mm-hmm.
So
Clear.
it has value only if you take everything together. So in that case, it is a CGU. Okay.
Okay.
So the
Okay.
definition is smallest identifiable group of assets for whom independent cash flows cannot be identified and calculated. So they go together. Understood?
Yeah, makes sense. Okay.
Now, the rules of allocating impairment. So what happens if in that group there is impairment, but you can't actually make out which of the asset is actually causing the impairment? Understood?
Mm-hmm.
So in that case, we have a rule to follow according to standards. So what does standard say? First rule, the standard says that all the impairment first should be netted off against any assets which shows indications of impairment. Understood?
Mm-hmm.
So that means likely impaired assets should be netted off again. First.
Okay.
Okay. So after
Mm-hmm.
taking certain amount of impairment from there, you would have some impairment remaining in your hands, right?
Mm-hmm.
So rest of the amount would also be taken against the goodwill that your company holds. Clear?
Okay.
Now again, there would be some left, right?
Mm-hmm.
The rest of the amount that is left would be netted off against the non-current assets. Clear? So all the
Okay.
non-current assets, you're going to take it and you're going to proportionately divide the impairment among them. Understood? So that is called a pro rata basis.
Okay.
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 Now, the end of the quote. The asset, while you're going to do this, you have to make sure if the asset already has a recoverable amount mentioned in the question, you can't depreciate, oh, sorry, you can't impair it any lower than that. Okay, suppose you have an impairment of 500. Okay, what did I say? You
Okay.
have an impairment of 500.
Yeah.
The likely impaired asset has a recoverable amount of 300, let's say.
Mm-hmm.
So there is 300 for an asset value. That is the recoverable amount. Okay.
Mm-hmm.
So
Yeah.
and the shown amount in the balance sheet is 500, right?
Mm-hmm.
And the impairment is also 500. Understood? So the asset
Okay.
has amount of 500, asset has a recoverable amount of 300, and the
300.
asset impairment is 500. Clear?
500. Mm-hmm. Clear.
So the maximum you could take from the asset is just 200. Clear?
Yeah, clear. Okay.
Understood?
Mm-hmm.
So the asset should not be lowered down its recoverable amount while you are netting off the impairment from the assets. Understood?
Oh, okay, understood. Okay.
Okay.
Mm-hmm.
So that's it. IAS 36 is over. Do you want me to do the problems today or tomorrow?
I don't mind. I also have like a couple of